All right, so let's jump into it. Bang, look at that. Smack bang on 12 o'clock on midnight. Probably almost to the second, actually. Jeez, yeah. So it's a little bit later for the weekend review, but the main point of these things is to get it done over the weekend. So we're stepping into the game and up to the plate sort of on Monday, and not sort of thinking, okay, geez, what's been happening? How do things close up? How are we sort of supposed to plan our attack? So look, with that, sort of starting off with Aussie. Um, I've just sort of had a look at this now, and like I mean, obviously, sort of like I follow the charts as they're happening, and that I'm trading all the way sort of through, so I know what's happened with the price. But of course, standing back a little bit and going, okay, here we go. This helps get you a bit more of a perspective on sort of what we're actually sort of seeing sort of play out, and obviously gives us a chance to sort of look at a couple of sort of cross-reference a couple of the charts to sort of see if we can see a general sort of theme in where the sort of flows are going and where the sort of money is sort of coming from going to. So, as I said, look, starting off with Aussie, we saw it break higher on that sort of last bit of US data. I think it was PCE, excuse me, on the weekend, and on the weekend it was on Friday night, and obviously that sort of saw things explode and push back up. Push back up through the highs and actually put in a new high. So we came up to just under 69.40. So if you remember sort of back down in this part over here, so this would have been, as you can see here, the Thursday, I was saying, look, if we break this part over here, potentially we could be seeing this larger sort of channel sort of forming through here. And I thought sort of this move here might have continued a bit quicker up until the sort of 69.30, I think I called it at the time, obviously, which would have put you around this zone over here. Um, we had a little bit of a pullback, as you can see. If you look at just this individual move here, it reacted off the 38, and when it came up to those highs, obviously pushed through. So we know if we look at this in one move, as in push up, push down, we know this leg's always going to come. We don't know where this bounce is going to come from, but this is why you use the fib, the retracement. And you say, look, it came from the 38 fib. We know that's pretty strong. That's still a bullish momentum. Once you come back into the highs, it had that bit of news, bang, push through. And got that next leg up to the top side there. So look, it didn't. This isn't a perfect sort of channel. Like we've got some nice sort of touches to define the bottom side of it all. The top is, it's there. Look, it's on touch. Well, it's a touch. This is where we sort of started here. A little bit overshoot here, a little bit of an undershoot here. So I'm not super convinced that it's a proper channel, but all in all, you can see obviously we are moving. We're putting higher lows as it sort of moves through. So this is what we can kind of work off at the moment, if not just the horizontals that we've obviously got marked out. So, as I always sort of say, you can't really put too much stock in the last couple of hours of a session, of the Friday session, and that because Asia's well gone, Europe's packed up, last couple of stragglers at their desks over in the US and that. So, I wouldn't so much consider so much of this on here, but obviously, as you can see here, we did see some selling come in from this new push up to the top side. So it broke out here, like we're talking, if we sort of zoom this back, let's go into the daily, we can see we've broken through these highs, which were the highs of July 23. Actually, no, they weren't the highs. The highs were a little bit higher just on the open. It broke through there. And so realistically, if we look at where we're at the moment, these are the highs that we were looking at, which is this red zone through here. So if we get back onto our 4 hour, we can see it a little bit closer. It did manage to close out the top side. That's one thing. And it is still in backtest territory. So it doesn't mean that sort of like, it's, confirmed that we're definitely going higher here because obviously the selling did come in once it got along the top. But again, it leaves you in a little bit of no man's land because it hasn't sort of broken back down under here. But what we can start to do is sort of define some sort of levels that we'd be looking for confirmation whether this is a backtest to go higher because we know where it's going to go if we do get that. Let's make this a zone. And we can say that we kind of know where we're going to be sort of confirming this area here as a bit of a failed breakout. If we take out these highs over here, so if we take that to the wick there, because this is where we saw that 38% pullback. Now, if we look, obviously you've got to sort of consider both sides of it. So if we say that, okay, yes, this is a bullish move, then, we know that this is a sell zone. We just sort of went back, back in July, that was the sell zone. That was the sellers. They were some big sell downs there. We saw them try to do it just a week ago. What was it 21st? Actually, this week, sorry, it was on the Wednesday there. Second attempt, pull back here, 38, bang, and it pushed up. So, it is within structure to say that it's backtesting to then potentially move up to over here. That is a possibility. However, as I said, you've got to consider both sides of the coin. And what I'm sort of thinking potentially, given a couple of other reasons as well, could be that this was a last-ditch effort to sort of break out to those highs, take out any sort of potential stops that have been sitting around there, and that this break back here could in fact actually be coming down a little bit further and could be coming down towards 68.50, 68.60. There we know this is the bottom side, and this is a bit more of a confirmed side because you can see down here we've got a touch, we've got a touch, we've got a touch, and I think potentially this is going to be a very interesting area for what may happen with the Aussie. So there are your two possible outcomes. One, we get the break, so this is a retest. If this is the case and we see the buying coming in, then we know that sort of really taking out that wick. We want to sort of close above this range, or just really just taking out that wick at like 69.40. So let's put an alert on that one there. So so that would be your, if that alert goes off, that would be your back test confirmed. And then we know that this is resistance, resistance. It then confirms a support. This is our resistance. That's then a higher high after the breakout. And then we're moving up to 69.80 is pretty much the next level, the next price target that we'd be looking for in this sort of direction here. So that's one side of it all. The other side of it is basically, as I said, that we may see a further selling down that comes down here. We'll see a reaction at this level here. Like it won't just cut straight through, most likely, I will say, it won't just cut straight through. If it does come down here, you'll see a little bit of a bounce up. You'll see a little bit of a push here. And then if it comes through a second time, that's going to be your breakdown there. So let's just update this. We can update this with our new fib through here. So this level here, as I said, this will be an interesting area. Now if we sort of drag this out as well, we can start to see that you got a couple things happening here. You've got the 61% retracement of this last push-up move through here. We've got this rising support that comes up through here as well. These are both lining up at around 68.50, 68.60, this zone over here. A couple of points just above that, you do have these wicks down here as well from that last push-up. So there's a good chance, I would say, most likely, that you might sort of come down here and then see a push-up here, and then you got to determine whether you're going back up or whether you're going to come down like this. If we play out this with a downside attitude and downside thoughts, let's clean some of these up a little bit. If we play this out and say this to come down here, tries to rally up, find some sort of resistance where we'd seen it here, here, and then potentially here, and then breaks this a second time, you got to think, you're breaking so many different sort of confluences. You're breaking the immediate horizontals, you're breaking this large channel, which I think is the more important one. Just remember what happened when we broke the channel up here. Look at the result. Broke the channel of this down move, look at the result. So these are the kind of things where you could start to see, okay, and we see a little bit of a further sort of pullback. And then we're looking back around sort of like early 68.20, this kind of zone down over here, which, I mean, as I said, I don't think that this is necessarily, okay, this is the end of Aussie and we're going all the way back down to 65s or anything like this, but, we're working with the here and now, and the here and now sort of says that if you come down here, you will most likely see a reaction from here. You'll push up, we then look at where have we seen the sellers step in again, step in again, step in again, and again, if you sell down from this point one more time, think about all the longs that have just got long in this area up here and they're trapped. Maybe they survive this first swing down. What happens when they start to make a lower low after this high up through here? You could also, I mean, it's not a perfect head and shoulders, but this could also be a bit of a head and shoulders that starts to play out through here as well, which then you look at the measured move from this range, which also gives you that kind of range, and you're breaking down towards the low 68. So I'm leaning more towards this, that we could see some Aussie selling come this week. Of course, we've got to check the charts. We've got to check, check the news. We've got to check the other charts just to sort of see if this kind of confirms and lines up. Another thing that I've also just pointed out before was that we've got a negative divergence happening as well. So this push through here, where we saw this large push up, sold down, and then it's driven up, driven up. This, no, like if you zoom this right out, it's technically just crossed, but I'm not really one to sort of like split hairs on this kind of stuff. But if we see continued sell down, that's going to cross this RSI, and this is going to start to move down as well. And if we see this start to move down as the price is moving down here as well, that confirms your negative divergence through that last push up here, which leads again into the idea that you're going to see a bigger move to the downside. And as I said, look, we've got a couple of targets that we're looking at, but 68.20, 68.100, the round number, and then 68, the 67.80, which from where we are at the moment, what are we at? Sort of up at 69. You were looking at potential 100 points or so at that last target, so to come through this area, find some buying, and then sort of work out what's going to happen on there from there. So look, it's really at the moment it's hard to call. I mean, the fundamentals still sort of tip in the favor of Aussie being more upside potential. With the sort of RBA still being quite hawkish with it all, with the a bit of scratching back of the surface of that CPI, where they sort of said that, hey, look at that, we got down to 2.7, and the rest of the world's cutting, why aren't we? But, really that's also beefed up by sort of also government subsidies with all these sort of energy sort of rebates or whatever it was with there. So really the number's actually about 3.4 or so with the core, I think. So, there's a couple of things that make me think that, yes, Aussie still potentially, or still most likely, is coming up to this 68, 69, 80 to 70 area, but it doesn't mean we can't pull back a little bit and start to think, okay, well, where can we reload from this level? Because if we look at this and we drag this is just in this last move up from here, from this last pullback, and we put it up over here. Make this one a bit thicker because it's a higher time frame. Higher time frame, what's that come out like? Oh, jeez, that looks a bit crazy. Good up. No, that's not looking good. I haven't played around with these ones for a while. White. There we go. There we go. It's a bit thicker. Anyway, if we look at this level here and we sort of say, okay, look, here's our lows, here's our highs, and this is where we're potentially coming back. Remember, 38% is still a bullish momentum, and that's 68.17, which comes down here perfectly in line with a pretty sort of strong area of support, obviously, as we were breaking through, which are these previous highs over here before as well. We did do a little bit of a back test, but there's no reason we can't still just sort of range this area for a little bit while we're near the highs before you get a big breakout. So again, I've got a couple of things. I mean, it's still technically in breakout territory. So this could still move up to the top side, yes. And we've got the alert to confirm if that move is going to go higher. But with the negative divergence, this sort of sell down potential to come back and sort of test this sort of rising support, a second break of this rising support. So if we bounce up and then we find the sellers come back in where we've seen them before, where we know historically they've been quite strongly, and then we push down here. So if we put an alert down here and we say, okay, break off channel, deeper pull back coming, that's where I'd be looking for, really to sort of sell in, basically to sell into any rallies. So it means that, so obviously we're going to be overall be moving down as to sort of how deep we've got to sort of play that one out. But I would say that potentially we're coming down. I could see this coming down 100 points or so from here. And, we're up at 69 at the moment. 68 takes us back to fairly strong supports. It's still only, as I said, if we look at that through, let's get rid of this for now, delete that one. If we look at this from the highs to the lows there, where's that thing gone here? That's still 38%. So, and that's like 70, 80 points pull back down here. And really, these things can really sort of start to get down, and what if it starts to shake everybody, get right down underneath these lows over here? We could be seeing a lot more of a deeper pullback. But I think the main thing to look for here is the break of this channel. If we break this channel, we look for the deeper pullbacks. We look to sell into the rallies. If we break to the top side, well, on with the show, and we know where we're sort of heading. We're heading up to this 69.80 to 70 area. I still think that even once you get up here, 70s, like round numbers are big, generally a pretty big deal, of course, but you know, 10's round number, that's going to get some people sort of really sort of hammering in with some sells. So that's something to look out for there. So let's flip on and go to DXY. So DXY obviously is continuing to sort of break down to the downside, but we've seen it start to sort of really just find some sort of level of support. As I said, it broke down and actually took out all the lows off that PCE data. Tried to bounce back up. Sellers stepped in where we've seen buyers be before. This little grey zone, the pushes right through here. We've seen that the buyers are sitting here. Look, buyers, close enough, buyers. It's broken down underneath, retested, and tried to go down here. So with this, if we sort of see DXY, I mean, at the moment, it looks like break, retest, and again, it's in no man's land. It hasn't confirmed because it hasn't taken out a new low, so a lower low after the break. We've got this lower area where we've got the buyers sitting just through here. So really, at the moment, you need to sort of get down really below that 100 again, just to sort of see if we can sort of see a move down to, say, 99.70s is that first price target, really. We thought maybe we get the back test here and push back down, and that spiked up. So if we drag this across over here, this is still a fairly decent line. I mean, look, it chopped and changed a little bit trying to get through this, but we called this big short down here the other day. If we put this onto the daily, this was the big sort of candle. If you go back, well, it must have been this day here. So it was on the Wednesday. I said, look, we're going to get a big candle. And we didn't get it that one day, but we got it the second day. And that's what I was saying, retest to try and take out any of the shorts, slammed it back down. That's fine. This is our new battleground now. These lows down here, where we can see buyers have been here, we know they're sitting here now. If we see an absence of these buyers sitting in this level down here, well, we know where we're going. We're going down to this price target over here at sort of 99.70. But till we get that confirmation, major lower low, target 99.70 conservatively on that move there, which, in DXY terms, 40, 50 points, that's a big move. And that's going to have serious repercussions across the market. We're going to see gold, metals, and Aussie and all these other things pump up a little bit more as we see them sell the US dollar off. But as I said, look, buyers, very strong reaction here. Buyers, a reaction here, but not super, super strong. But we still know that they're sitting there. That's two tests to confirm that at the moment. We are moving right down here. This RSI isn't really screaming oversold as it has come down here. You know what I mean? It's not a big, obvious sort of negative divergence or anything, at least not on the daily. Let's have a look on the 4 hour. 4 hour, look, it's nothing really to sort of report to on that. I don't know what time frame. So I'm going to start naming the time frames that I put these things on, because otherwise I just sort of forget where it's taking us. But point being is that we know the buyers are here. If it breaks this low down over here, we know where it's going. If it does decide to come back up here and take out these retest wicks, then this can again fall into a little bit of a short-term double bottom. Doesn't mean, it's a bit hard to call it a double bottom because it's not like it came down from a trend like this. You know what I mean? If the double bottom has a downtrend coming into it like this, that's one, that's two, that's a double bottom. And then a rejection and reversal move up the other side. This is really just drop down. So I wouldn't be saying, okay, DXY is just double bottom here. Let's look at our targets up over here. But again, we know where the prices would be, and most likely, this area over here, this 101.80 area, is going to be very tough. This big falling resistance that it's been respecting this whole way down. That's what we're really looking for. To be sort of the signal that you're going to see a further move to the top side with US dollar. At the moment, it's very much obviously down. But again, It's had this big range, it's broken down, it's survived. It's broken down, it's survived. If you start to sort of find that buyers are really holding this zone down here, you're going to get all these people that have been waiting for these big breakdowns go, hold on, wait, maybe it's not breaking down here. And that's going to fuel a little bit of a push back up to the top side. So in short term, I would say above this falling resistance. But look, you got so many levels to really sort of where they could happily sell it down from. I don't see this going super far, if anything, but I am open to the idea that we could potentially see continuation for a little while of this sort of range area with DXY. I'm not about to sort of jump in the camp and say, hey, yeah, it's going back up over here. I don't think that's the case. But as I said, if you look at this and sort of play them out at the same time, say it does get, well, say it does get onto a little bit of a push, and say that push lasts for, you know, a couple of days or whatever, and it moves up over here, hits this resistance over here, and then moves back down. We were just talking about Aussie. What do you think is going to happen with Aussie? It's going to break that channel. Break the channel, same time breaks this falling resistance. This drives up here. That drives Aussie down. This will sort of hit a resistance and start to move down. What will happen with Aussie? Aussie will come down. Aussie will come back up. But this area here is a very plausible thing that we could be seeing over the next week or so. So much of the market have been selling US dollar for so long, and they're waiting for the breakdown, waiting for the breakdown, waiting for the breakdown. It just is not coming as of yet. Even though they've broken the range, they've broken the smaller range and pushed it down and down, it hasn't come yet. And the longer that it holds without breaking down, the more you're going to see people de-risk those positions. And as they de-risk those positions, we're going to see the flows come out of the other things, which means in this case, Aussie metals, these kind of things, and they could be due for a little bit of a cooling off. So it's that's something that I'm kind of leaning towards the possibility that we get the break here. Look, again, we've got the alert set here. If it breaks this here, the alert goes off. We got price target 1, we got price target 2. You know, these levels are here. We know where to sort of buy them from. And if you come down to these two levels, well, again, if just in the case of talking to Aussie, we could see Aussie come up and test that, you know, 69, 80, 70 cent level. But what happens, you know, if this comes down here, hits price target 1, hits price target 2, Aussie hits 70 cents. At the same time, this is the cross-chart confluence that I talk about, is that you could see a lot of people take their profits from these things. We see US dollar get a bit of a rally and Aussie sell down a little bit more. So I think that we are going to be in line for a little bit of USD buying. Even if it's just a short-term, medium-term move, I do think we're going to see a little bit of an extended period of them buying it up, because a lot of people are going to be so short of it. Time to squeeze them out. Again, if you want to sell US dollar and you want to get it down, you want to get DXY down to sort of like 97, 98, where would you rather sell it from? 100 or 101? Well, you know, I mean, you'd rather squeeze it all up, pack up your shorts from here, and then drive it down here, not sort of take it from down here. So again, it's just making me think that we have a little bit of US dollar buying cut sort of coming just from, you know, the technical sort of point of view. We flip across and have a look at gold. Gold, we've seen, you know, hit that price target of that little range break, actually hit it perfectly through there. And I've been saying this for the last couple of days, and I was actually shorting gold through this last period here. I've been long to this breakout to the top side here. I waited, got short, and actually did quite well through this period here. We got a big push down here, and sort of, you know, I closed out, I think, sort of around sort of 40, what was it, like sort of high 40s or something like this, 47, 48 or so. So I did quite well actually, because I was quite loaded. We had this, and this is another thing as well. If we look at this little spike up here came up to 74. This was off that news, the PCE. And, you know, we saw US dollar sell down, we saw this push up, and it came back down. That to me says even if you've got news that should support you to be breaking up higher, you're still unable to do it. And there's a term that I used to learn, I call it breaking the data drop point. I mean, maybe other people have got a different name for it, but the thing that I call with it is where the level of where the market was, whatever instrument, if it gets the news that supports it to move in a certain direction, it does move in that direction. If it, even with that supporting news or data, comes back down and breaks the data drop point, which was this level around here, as we can see, bang. The flow after that is generally quite a good trade. because it means despite whatever that news was that supported it to the move, the overwhelming, in this case, selling, or if it was going down and then moving back up, buying, was that great that it just overruns that position. It's added all that extra liquidity, and we saw this big move down here. And yeah, as I said, I did quite well through there. So that's just that trade on Friday. This is gold as I sort of see it. This big rising resistance, this was an overthrow, this area through here. It should be respecting this, even if this were to be some sort of like, which I don't think it is, say some channel like this, and say that, it's coming down here. Even if it was a channel, it's coming down here a little bit more. If this was a rising wedge and it's an overthrow, it's coming down here a little bit more. If we see DXY get on a little push, it's coming down here a little bit more. I think that again, I still think we have higher to come, but it doesn't mean we can't come back to these levels. And these things can't go out on their own little tangents for too long. We had the range break, backtest, backtest. Think about all the people that are trying to, we had a price target here and it sold down, market agreed. All the people that tried to short it here, they got blown out. All the people that tried to short it here, this is a big top sell signal. Shorts there, bang, they got blown out. They got blown out. And I say this about markets, they will absolutely screw you mentally. They'll screw you financially, and to the point where you're just like, no, look, I can't do this at the moment. I need to take a break. Either I've got no money left to trade it, or I've got no, I'm just mentally wrecked from it, and I just need to just stop. I'm going to take a break. That's when they'll show the move. That's when you'll see things move along. So let me clean this up a little bit so we can start to look at a couple of these levels. Because if this is the main move and this is your high up over here, again, we look at, okay, markets don't run in a straight line. That is very true. Say it comes back and pulls down over here, it can still come back to 2,600, which is a $57 move. And that's still at the 38% of just this last leg here, not to mention the actual size of all these moves through here. So gold is absolutely running hot. Like it's not in the sort of case of like, wow, gold's about to crash. It's not the case. But it doesn't mean that sort of, again, you can't see some pullback to better prices to then sort of add to the overall theme, which is pullback to then go higher. So the sell down here, the fact that we broke down under this little support here, tried to push back up, I think, look, realistically, I want a whole new high to call this a fake out. For me to say this is, actually, I'll tell you what, we'll make it halfway here. Get rid of this one, and we'll call this, let's zoom in a bit, call this its a little range, right? Unable to close out the top side, came down here. It did close out the bottom side of this, but obviously brought back up here. This is overthrow area. I think this is a last ditch effort. If you probably get above, or say a close above 26.76, I'll call this a fake out, and I'll say, yeah, that's going to jam up and that's going to rip higher. Because remember, a breakout's good, but a failed breakout, or a fake breakout, I should say, is just as strong, if not stronger, kind of indicator. So these things, you got to play and plan for both sides. However, if we take out 26.42, so let me just put an alert in here, break down, candle loads. If we see a breakdown below 26.42, I think that's the idea that we're going to be coming back down at least to 2,600. I think, you've got a little bit of this sort of more rising support coming through here. Drag this one up through here. And, you've got a couple of potential supports on the, diagonals coming through here. You've got this little wick high over here. You've got the big round number, 2,600. This is an area that I would say is worth a look to see if we get a bit of a bounce through here. But I think that sort of, again, this plays into the idea that potentially you start to see some cracks form. And I've started titling these things just so I can sort of like, one of the sort of things that one of the things that I've always sort of done with my analysis is try to almost, I do these sort of rambling things that go on for ages and ages, of course, but I try to still be able to condense down into, one or two lines, and I'm talking by lines, I mean sort of like, a couple of words, what's going on. Because, it's all very well to sort of have these sort of like 20 minutes breaking down, but you got to be, okay, how can I action that? How can I actually apply that to something? Like, what are we looking for? And this is a potential breakdown of this high up over here. Again, it doesn't mean, okay, gold's fucking going to, 2200, 2300, but it does mean that potentially we could be seeing a little short-term sort of selling down. We could see DXY pushing up. We could see Aussie coming down. These things generally all run in sync with each other, and this is what cross-chart confluence is. So if we see this sort of potentially sort of come back down, you got the 127 retracement of its last push up higher. You've got this rising support coming through here. You've got the high wicks here of where it tried to sell down previously, the big round number. You've got a couple of things lining up to sort of say it could come down here. One thing, actually, no, if we look at this here, potentially, as I said, this is overbought, quite overbought on the daily. The 4 hour, not so bad. I could see maybe a little bit of a push up early and then a drive down. And this is why we put the alerts here to confirm these moves, because you got to factor in some noise. And say we sort of go push up here, get everybody thinking this is a fake out, come up to the top here, 57, sell down to the move down there. That's what I'm sort of thinking with it all. Look, you give me a close above 26.78 or whatever, 26.75, a close up here, I'll call this a fake breakout, and I'll call 2700 as the next target. And you still got a 25, $30 move moving up there. And that's not to sort of say that 2700 is the full move either. You know what I mean? So that's for the top side. But I am starting to think that we have got a couple of cracks forming, and that's what I was actually saying a second ago. So I'll try and condense down what's happening in a line or two, but then I'll try to just put a theme to it all. So by titling these things as I put them on X. But yeah, I could see certainly a little bit of short-term weakness here. And, that's fine because I'm happy to buy gold. But I've said I'm very cautious to be buying gold up around here. I'm in and out, that's fine. But I don't want to hold weight by buying up above 26.50. And I'm sure a lot of other people don't as well. All right, we got silver. Silver attempted to break out. This is a 12-year high we had for silver, this little sort of wick up the top here. But we can see range, unable to break out the top side. Sellers came in where the sellers had been previously. This is very similar to what I was just saying with Aussie, as in we had the breakout. What if the breakout fails, comes back down, moves back up, sellers come back in? Have a look at Aussie. Sellers were here, sellers were here. What if it breaks out, comes back down, comes up here? Sellers are where they were previously. That makes this a failed breakout. So if we go back to silver that we're on, similar very sort of setup of the thing, and look at the reaction that happened here, where you had the failed breakout, it came in, tried to rally, and the sellers stepped in where they had previously. You've got a bunch of longs stuck in this area. You've got sort of all the shorts stops that got hit and triggered out there. So, it's, you look at these sort of things. So silver is coming into channel support here. This little wedge didn't really sort of count so much. It did try to hold the top side of it a little bit, but to me, it's pretty much just blown out right now. So we drag him up a little bit, maybe. I'm not really a big fan of that. I'm going to get rid of it. Actually, look, we'll put it in just because that did give us a high over here. So it is something to potentially look for moving forward. But the main thing I'm looking for is this rising support over here, plus the fact that it's sitting on this horizontal. Again, 4 hour is a bit overbought. How's the daily look? Daily, oversold on the 4 hour, daily overbought. You know what I mean? Like if this breaks this channel here, this rising support, plus this horizontal, you're going to get a lot of people that want to sell it. Again, it doesn't mean it's over. It just means that it comes down a little bit. Comes down to 30, 50, comes down to sort of, 30 flat. These are still decent little moves. I mean, if we put I've already got the fib on this one, so let's drag the fib out over here. So we're still only at the 23 here. Yeah, I would say again, you break this rising support, we're going to see a little bit of cooling down here. These things are going to flow, and again, this is why we look at multiple charts because if silver breaks down, if gold breaks down, if Aussie breaks down, those flows are going to be going into US dollar. That's just how it's going to work. I mean, obviously they don't all go there directly, but you got to remember, these things happen across all the markets at the same time. So you're going to be seeing probably similar things on the pound. You're going to be similar things on the euro. All these sort of USD crosses. So, it's not just sort of one thing. But if we see metal break, if we see silver break, we know that's going to generally probably be happening the same time as gold, or gold happening the same time as silver. That's again going to sort of flow onto Aussie. Aussie's still going to break down a little bit. And all these things are really teetering on a point where we could see some deeper pullbacks. It doesn't mean they're dead, but it just sort of means that we've got deeper pullbacks coming, and they'll probably come across the board on all of them. Look, it could hold this. Technically, at the moment, this is still holding. But the fact that this didn't continue what should have been this channel, i.e. this high should have come up over here to 33.20. Sellers stepped in very hard. It was unable to hold that sort of range through there, and we've closed out the bottom side. This is on the daily, and the range didn't really apply so much to the daily. But you put in technically a lower low through this area over here. You got a higher low, a lower high. Here's your high, wherever your other high is for this wick here is like through this area here. We just saw that rejected from there. So you've now got a lower low and you've got a lower high. That kind of tells me potentially we're moving down like this. Now let's fix this up a bit. That's the negative D colors. Let's make you this and this. Overbought, crossed over onto the 4 hour. That didn't line up very well, did it? But so put this like this. There's your 4 hour falling. How's this line up? Not great. Could be something like this. Halfway decent, I don't know. No, not a big fan of this actually. But again, I wouldn't be surprised if we see a little bit of a push up early and then we see the breakdown. But I think we've got downside coming, so sell some rallies and that on silver is my opinion. Copper cracked into that sort of price target. Yeah, man. It is nice, I have to admit, when you draw these things out and they just sort of clip them just perfectly. I mean, but again, I'm not just picking these numbers out of the air. Look at this on a daily. You know, sellers are here, sellers are here, sellers are here. So where are they going to be? Well, you don't win a prize for just being able to pick that out. But this is the plan that we said. Look, hit the price target, sell back down. This is what it's doing. You know what I mean? Like overbought, rolling over. Looks like it may sort of want to come back down. This was resistance. Let's call it now some potential support. Let's say that our previous price target would now be our short-term downside price target, like we've seen with this arrow here. Potentially come back in here, we touch this level, and then on with the party. But it does mean that we could have some potential pullbacks coming. You know what I mean? And if we drag this up a little bit here, even if you do come to here, that's only the 23%. But what if you sort of, let's get rid of, I don't know where this big one relates to, but what if you come back a little bit? So you can still come back down, 600-700 points. Where are we at actually now? 4-9. So you could come down 1,500 points and still be at the 38% retracement. You know what I mean? So there's certainly some potential for these higher time frames on a daily to see some continued cooling off. And if these sort of come back, it doesn't mean it has to come all the way back down to sort of under 20 to be oversold. It could come back down to the 50, fine rally, and then sort of come back up. But as you can see, they're generally fairly long trending moves with copper. So again, when you hit the big price targets, just take a bit of time to chill. You want to jump on the other side of it, that's also something that's a possible play. USD CHN, and this is coming down into the lower end of what we sort of call could be a potential area. Look, this was our target. We've got the next one down the bottom here. This is our target because these are areas previously. These were the sort of resistance broke through a long time ago, support, and it broke through again. But again, this is overbought. It's tipping up. Remember, if you flip this chart upside down and you look at this little candle here is what is called a hanging man. And a hanging man is typically a reversal. All you've done is just flip the chart up the other way. So this kind of thing here, market's trying to push back up. Sellers are saying, nah, we're still going to do it, but they were unable to sort of get that and overrun them. So there's a tussle through here. So a break back up here. Let's just call it short term. Week one. Oh, we know this one here. That's your level for the top over there. Downside, look, it is a potential. If this breaks down through here, which I don't think it's going to do, you could see a little bit of a meltdown, basically. Capitulation, that's the word I was trying to think for. It's late. Jeez, 40 minutes now. That's the level that we're sort of pushed down here. But again, I do think that we have a little bit of a push back up to the top side over there. So quick little look at what's happening over here with the gold-silver ratio. So for these ones, if we want to see metals bullish, we want to see the whole chart moving to the downside. We want to see metals getting a little bit of sold off while it's moving back up here. This was an area, and you can see it is absolutely dancing around this area. Like this is, what they call the megaphone pattern, which just everywhere. And this is the thing, sort of like what it's doing when it does this. It makes a higher high and it makes a lower low at the same time. So you've just gone lower low, lower low, lower low, lower low. You've gone higher high, higher high over here. It's wiping the book. This is what this does because people get positioned for one way and then they get stopped. They get positioned for this way, they get stopped. It's not so much that you trade this chart, but you use it as a strong indicator for metals. And as I said, if it breaks back up above this zone over here, this 84.10 area, and we see a big of a move up here, it doesn't mean it's like going up over here necessarily. But it does mean that you're going to see a push up this direction here. And as I said, if this chart here is moving in this direction like this, you're going to see metals weaker. If this rejects from this area and comes back down over here, then you're going to see metals push back up and test the highs. Let's put this in. Just the highs if we get above here. Sorry, if we follow this sort of section, and then this. Oh. And I can revisit this one through the week and that just to sort of see how strong this one plays. But yeah, that's really, it's just dancing around this area here. And this is why you haven't seen gold really commit to the breakout to continue these higher highs. Because this is dancing around, and that is in turn happening at the same time that gold's sort of dancing around a bit. All right, so that's our charts done. We can have a quick look over what news we have. So we got end of the month technically on Monday. So again, end of month flows can also affect things a little bit. You might see a little bit of USD buying as people sort of rebalance their books and that with this as well. We got PMI for China on Monday. Everybody seems to be back at least. They're not sort of, oh no, we got Canada. They're having a bank holiday now. Everybody's bouncing around with their holidays. But look, we got PMIs for China. This is one to watch to sort of see how this affects things. A stronger number here is going to be a little bit better for Aussie, of course, and that's how it sort of applies to us. Moving through, nothing really. Chicago PMIs and that, still a fairly weak number. Again, stronger numbers over here, beating expectations is going to be stronger for US dollar. At the moment, you're looking for stronger US dollar to support stronger US data to support stronger US dollar. It's that time of, good data is good, not good data is bad, i.e. kind of sort of stuff. So that's certainly something to watch. Powell talking on Tuesday morning, Monday night. Moving through China, bank holiday on the Tuesday. Okay, we got retail sales for Aussie. This is ticking up. So again, stronger numbers than that is more inclusive of, being a bit more hawkish, having rates a little bit higher. That's going to be stronger for Aussie. If we see a weakening in this number, so say it comes in at 0.1%, just as an example, that means that the rates at the height they're at are having the desired effect, in which it's curbing people's spending. And that's what they want. They want to see people sort of, cool off on their spending because it means they haven't got the money to spend. if people have still got the money to spend and the retail sales are still going high, then it means that sort of obviously, as much as you sort of watch the news and they say they're crying about the rates and their home loans, well, they're still managing to find enough money to go out and buy and shop retail, aren't they? So it's really not as bad as people say. We can keep the rates for a little bit higher for a little bit longer. We're not in any rush. That's how that plays out, and that's the thing. Higher rates, higher retail sales, you'll see a little bit of strengthening in the Aussie, and then sort of if it's a lower one, you'll see a continued weakening of the Aussie. And this is the thing as well with these, retail sales is what I call third tier news. It's generally a fairly strong thing. It probably means a little bit more in the US than it does in Australia, but it's still something to watch out for as well. Moving through, CPI in Europe. So, I mean, look, they're smashing, which is one underneath. I mean, 2% is the target, and they're looking to potentially sort of come down underneath. 2.7 for the core. Okay, that's well within target though. Then we got Jolts coming out. Pretty flat looking at that thing over there. Again, higher numbers are going to be stronger for the US because it sort of means that they're doing what they need to do because they've just cut. Remember, this is the flip of it all. Because they've cut the rates, if they get strong numbers, well, it means kind of like, well, we've got strong numbers. We can still withstand these things. It hasn't sort of really affected the markets and that too much. They're able to sort of withstand the current conditions. Maybe we don't need to stimulate more. Stimulate by sort of cutting rates, that kind of thing. ADP, and of course then Friday, first, oh geez, that's a low number, isn't it? Geez, ADP. ADP is sometimes a bit of a precursor, but generally, more often than not, a bit of a non-event. And first Friday of the month means NFP. NFP is the big one for us. Fairly flat in their predictions with that, 142 to 144. I think they're very cautious about those big sort of missed numbers and that, where they were sort of, hey, out of nowhere, we got 300,000. But again, keep that in the back pocket. These numbers are generally pretty dodgy and that, like, actually proven to be dodgy. Like they sort of go, oh, that's so sorry, we accidentally no, not overestimated, over-reported and actually had the market effect and react of 800,000 extra points. 800,000 extra jobs. So let's just correct that a little bit now. Whatever, dodgy, but that's going to be the big one. So, with these big bits of news like this, see a bit of a cruiser in the middle of the week, but this is going to be the big one. High numbers there, I think are really going to see US dollar take off. So that's something to watch out for. All right, that's it from me.